Real estate in the Treasure Valley was really a roller coaster in 2022. But what's going to happen in 2023? Let's go ahead and get to my real estate predictions of what's going to happen in the greater Boise, Idaho area in 2023 right after this.
Abracadabra caducha.
Look, Pluto, you can really see it.
Will 2023 be the year that the market correction ends here in the Treasure Valley and the real estate market returns back to normal? Let's dive in and figure that out. But before we do, of course, my name is Mike Petras. I am your Star Realtor of Star and the Treasure Valley. And of course, I am your local realtor resource for relocations and to buy, sell, or invest right here in the greater Boise, Idaho area. I am also one of the 8 certified master inspectors right here. But before we dive into this information, if you have any further questions regarding this video, or you are looking to buy, sell, invest, or relocate right here to the Treasure Valley, please feel free to reach out to me via phone, text, or even shoot me an email, even with any questions or comments that you do have. And of course, if you do have some comments or you do think that my predictions might be a little off base, would love to hear your comments below of what you think is going to happen. What do you think is going to happen in 2023? Please comment below, more than responsive to them, and would love to hear your thoughts. So let's go ahead, let's get into it. Yes, I officially predict that the real estate industry here in the Treasure Valley will come back online in 2023, but the available qualified buyers to be able to purchase will decrease. But before we figure out why available buyers will decrease, why will buyers return in the first place? That's because I predict that mortgage interest rates will reduce. Home values have also come down since the market correction really started in late May, early June. Core CPI and core PCE reports are showing that the Fed's monetary policies are actually starting to work, which is resulting in mortgage interest rates coming down. Now, there has been a lot of talk lately as to if the Fed can actually come in for a soft landing as compared to a recession. Let's dive into that. If a soft landing does occur, yes, mortgage interest rates will continue to come down, but American businesses and people will feel it in their pocketbooks for much longer and for prolonged. In my opinion, the Fed's chances of a soft landing will be short-lived and a recession will actually take hold here in 2023. And why? Because I feel that the Fed has over-tightened their monetary policy, which will result in the effects of the recession taking hold. By definition, we are already in a recession, with 2 negative quarters of GDP, unemployment being below 4%, and inflation being above 4%, and a variety of other factors. And these are factors that the Fed really are not taking seriously or even acknowledging since their last meeting in November of 2022. Also, the effects of a recession usually take about a year after the definition hits to be able to show themselves, and currently the timing seems to be right. Due to the Fed's lack of acknowledgement of a recession possibly coming up at the last meeting in November of 2022, I anticipate that they'll be a little bit behind when the effects of the recession hit by using their tools, much like they thought that inflation was transitory. But currently, 57% of the economists out there think that the recession is going to hit by 2023, with 52% thinking that it can come as early as Q1 of this upcoming year. Also, the SEP's prediction for where the federal funds rate is going to be by the end of 2023 is going to sit at 5 to 5.25, which means that the Fed is still going to be able to put on the screws to be able to tighten monetary policy even further. So are they over tightening in my opinion? Absolutely. What do I think the chances of a recession are? About 95%, as compared to 5% that I personally believe that they'll be able to come in for a soft landing. So, soft landing versus recession and mortgage interest rates, really it just means the speed at which mortgage interest rates are going to come down. Of course, the soft landing being the slower out of the two and the recession being more accelerated. But for buyers, win-win overall because mortgage interest rates will come back down. I'm guessing that the Fed will come in at 25 basis point raises for the next several meetings in order to meet this goal. However, the SEP can change from meeting to meeting according to the data. Continuing to raise a federal funds rate just means that it's going to be harder for businesses to be able to take out loans to fund business operations, and that can result in unemployment. Businesses can't borrow money for cheap like they did before, which results in a booming economy. So it really puts a stall and a tightening on what American business will be able to do.
Come on, man.
But beyond businesses, why do I think that there's going to be a reduced number of buyers available when the markets return? It's because the federal funds rate, energy, food, etc. has absolutely been stripping the savings out of the American people. So has also the federal funds rate increase, which has absolutely decimated credit cards and car loans for people that need it. And although core CPI and core PCE reports that the Fed really looks at does not look at food and energy, we all know that we have felt the pressure of that, especially in 2022. With inflation above the wage gains, literally the American people have been bled dry. Regardless, the Fed still figures that the American people still have too much money in their savings and too much home equity, which is another strong case for a recession. So with buyers returning, but not in huge quantities to go ahead and start, it will reduce the inventory level to create stabilization for some time. But as mortgage rates continue to go down, you can anticipate that more buyers will come into the fold and inventory will start to reduce at maybe a significant level. So when is my prediction of this market correction to actually stabilize and buyers start to return? I believe that this can show up anywhere from late Q1 to late Q2 of 2023. But due to savings being stripped, etc., I do anticipate that most of the loans are going to be FHA style or low down payment conventional to start with. So now let's go ahead and talk about those mortgage interest rates. Will they return back down to the threes as they were before? My prediction is no. But why? It's because the Fed is running down its balance sheet. And as of September, they're running down their balance sheet by $95 billion a month. This means that the Fed is not doing its quantitative easing anymore, which is what kept the rates within the threes and low fours for as absolutely long as it did. As they continue to sell off the balance sheet, this will definitely adjust the mortgage interest rates and most likely up, because the more of the MBS that they actually dump, we know that when the price of MBS goes down, mortgage interest rates go up. So what do I predict the new norm of mortgage interest rates to be at? Anywhere between 4 and 5.5%. And when do I feel these mortgage rates will actually stabilize themselves? Between Q2 and Q3 of this year. Real quick, why do I think that buyers will actually be a little bit less when they return if a recession hits? Well, of course, it's because of unemployment would be one of the things. But is unemployment going to be at, say, a record level that we saw in earlier recessions in history? My guess to that is no, considering that the available amount of jobs far supersedes the people that want to fill them vacancy-wise right now. And the Fed also feels that way. But will unemployment become a deal? It very, very well could. We'll just have to continue to monitor and see what's going on. So in summary, do I see the real estate market right here in the Treasure Valley coming back online in 2023? Yes. And why is that? Because mortgage interest rates are starting to tick their way down. Do I see mortgage interest rates coming down and more or less rapidly due to the hands of a recession? Absolutely, as compared to a soft landing. Also, home values have came down in the last 6 months due to the market correction. But as mortgage interest rates initially start coming down, buyers will come out of the woodworks, but again, not in the numbers that we would probably have seen, say, a year and a half ago. There will be a reduced number of available qualified buyers due to the fact that the Fed has really kind of stripped out our savings. But in essence, I do see a stabilization to buyers' demand and inventory coming anywhere between Q1 and Q2 of 2023. As mortgage interest rates go down and keep going down, I do see the buyers actually returning and soaking up the existing inventory and whatever spec homes are available from new construction, maybe relatively quicker than usual. And I see that happening come Q3 to Q4 of 2023. Again, buyers will start to ease back into this market and then it should pick up. But what about that inventory later on in 2023? Can it actually start becoming like the market was a year and a half ago? My prediction, and really only at about 60% confidence, is yes, it could. But why? Well, really the answer to that question lies in new construction. As of current, builders have really kind of come to a halt right here in the Treasure Valley, especially the smaller ones. And why? Because the federal funds rate is as high as it is. It now costs more money for those builders that need to borrow money to be able to build. So a lot of them got out of construction. With the larger builders ended up selling off a lot of their existing spec and tract home inventory and retreating back to pre-solds. So with build time still ranging around 8 to 9 months because of possible supply issues or continued supply issues, plus the federal funds rate of where it is, builders will have a hard time restarting and will have to catch up to demand. And in this market, the larger builders have really kind of stopped building spec homes to create existing inventory and have retreated back to pre-solds. So if the gap between available inventory starts going down and buyers' demand starts coming up, to narrow that gap, what can we expect? Equity growth. But again, I see that supply and demand maybe returning 60% confidence late Q3 to Q4 and maybe even to 2024. So if this scenario plays out, I predict equity returning at a 5 to 10% rate. So let's go ahead and take a quick second and figure out factors that can actually disrupt these predictions. The first being of when the recession will actually take hold. I tend to agree with the economists that say that the recession will take hold early in Q1 of 2023, but again, we'll just have to go ahead and wait and see. Second, recessions are generally unpredictable in terms of their overall strength. Kind of like a hurricane a little bit, even though they got a heads up. But either way, how nasty can the recession actually get? If it does get really bad, it could really change up these predictions that we've got. So again, we'll just have to continue to monitor the data, but I feel relatively confident, especially when it comes to the jobs, that there's more jobs available right now than the amount of workers being able to fill it. So do I feel the strength of the recession will be totally hardcore? Not per se. Another one would be if the war in Ukraine actually really escalated to the point of World War III. If Russia does something to NATO or NATO gets involved, it could really turn out to be a nasty thing and a lot of countries can get involved. At that point, pretty much all of this could be null and void. Also, there is that threat if China actually invades Taiwan. If they invade Taiwan, or if the breakout of World War III, God forbid, ends up happening, that will definitely put inflation pressures back on the US. And then lastly is how much of their balance sheet, especially when it comes to MBS, is the Fed going to go ahead and sell off? If they increase the MBS by any kind of significant number in terms of their drop off, again, as we know, if the price of MBS goes down because they flooded too much of the market with it, we can expect interest rates to go up. And if they do it in any kind of significant value, interest rates could stay high or they could go higher. Do I see the Fed actually doing that, considering that they make the level of profit they do off of the quantitative easing that they did? No, I don't see them doing that. But at the same time, we'll have to go ahead and monitor and keep watch. As for my predictions last year, I'm actually feeling pretty confident in what's going to happen here in 2023. And in 2022, I was almost spot on. For example, there wasn't a crash like 2008. The Fed rapidly ended up changing their monetary policy, and they actually stopped their quantitative easing, or they stopped buying their balance sheet in September of 2022. I also predicted that the federal funds rate level would be at about 4%, which it is. The mortgage interest rates really started to climb in late February, early March. The gap between supply and demand increased here in the Treasure Valley. And I said that the market correction would arrive late Q2, early Q3, and I was spot on about that. I also said that a good buyer's window to buy was between January 2022 and March. And I said sellers should sell before late Q2. So really, I kind of nailed it on the head. And I hope that you find these predictions for 2023 to be just as accurate. Well, as always, thank you again, everybody, for taking the time out of your day to watch this video. And of course, if you're looking to buy, sell, or invest right here in the Treasure Valley, please feel free to reach out to me. I can be reached at 208-715-STAR. Again, that's 208-715-7827. And if you're looking to begin your home shopping experience, please visit my website at www.yourstarrealtor.com. Just go ahead and type in the preferred city or zip code right here in the search bar, and then come on over and go ahead and filter in the criteria that you're looking for. Of course, if you'd like me to do that for you and set you up on a specialized search, please feel free to reach out to me. More than happy to set you up. And lastly, if you're thinking about making a move from out of state right here to the Treasure Valley, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Please hit that subscribe button before you go, hit the notification bell so that you're constantly in tune with all the videos that I do come up with, and please don't hesitate to comment below, more than responsive to any comments that you have, and I'd love to hear your thoughts on what you think is going to happen in the real estate market here in the Treasure Valley right in 2023. Well, I look forward to that day that we speak. I look forward to the day that I call you my neighbor. God bless everybody. God bless America. And I look forward to that time. Thank you so much. Bye-bye.